The number one best catalyst for Bitcoin would be a President AOC.
Undeniable. You look at every single country that has gone more socialist, you see what happens to their fiscal situation. And that could very easily coincide with the next massive bull run. It wouldn't surprise me even slightly. Now, here's going to be the really interesting point. Gensler specifically laid a trap for the crypto industry by allowing meme coins and governance tokens that do absolutely nothing for the holder. So Trump's family comes in and takes advantage of Gensler's policies and makes an absolute fortune. So what happens with regulation? People say we have a capitalist system in America. That's a bunch of horse shit. We have a cronyist system. USAID was set up as an extension for off-the-book CIA operations and then was co-opted by the people who ran it. We knew that. That's very clear. But that's just the tip of the iceberg. I thought 90 was the bottom, I'm not gonna lie. I was wrong. October 10th was a massive deleveraging event, and it literally wiped people out, lots of people. Hundreds of thousands of accounts got wiped out that day. But you have to ask yourself the question, what else is going on here? I use the analogy, it's like, the poor arsonist who's just trying to burn down a building, and it turns out that there's a supply of thermite in the basement of the building, and it takes out city blocks instead of just the building. The most important catalyst is time and growth. I will say it again, Bitcoin is an option on its adoption as a global store of value. At a certain point, it becomes self-fulfilling. And I actually think we're past that point, and the market is just dramatically underpricing it.
That is Dave Weisberger, 40 years on Wall Street, the man who built the first program trading system, co-founder of CoinRoutes, and one of the sharpest minds on market structure out there. Dave's thesis is simple. Bitcoin trades like an option on its own adoption, and the market is still pricing it way too cheap. In this one, we get into why Trump's $1.4 billion in crypto earnings from 2025 was really a trap Gensler set years ago, why a President AOC could turn out to be the best catalyst Bitcoin has ever had, and why Mamdani's rent freeze is confiscation in slow motion. Dave also makes the case for why Satoshi's coins getting stolen could actually be good for Bitcoin. Stick around for that. I'm Rob. Welcome back to the Bitcoin News Channel. Share this video with one person who wants to more deeply understand Bitcoin's market structure. Let's get into it. All right, Mr. Dave Weisberger, thank you so much for joining us today.
No problem. Always a pleasure.
Absolutely. So I want to start off today's conversation with a joke about the big news of the week. The joke I saw on X this week was, Donald Trump didn't make his first billion in crypto until the age of 80. Relax, you still have time. So this, of course, comes on the back of the disclosure that just dropped. He made over $1.4 billion in 2025 from crypto income, more than Coinbase themselves did as a company, right? This was over $635 million from the meme coins and over $500 million from the World Liberty Financial. All right, so you have stated publicly that you thought that these meme coins were a bad idea. They killed the momentum of the market in early 2025. Now that the numbers have come out, where do you stand on it all?
I was right. It's pretty straightforward. Look, there are 2 points that have to be made here. First, looking at numbers that we pretty much could have derived and guessed the better part of a year ago, as an impetus for anything that happens in the market today is moronic. The only thing those numbers do is they increase the Democrats' ability to point to crypto as being a Trump thing and make it harder to get regulation and therefore worse for their constituents. The thing is the smart Democrats kind of understand that. They can beat on Trump through now, through the midterms, and then it's pretty much over because Trump won't be running in 2028. So they need something else to run against. And the one thing they don't want to do is be seen as shills for Jamie Dimon and the banks as we go into 2028. And the truth is that crypto should be bipartisan, and the notion of regulation that would not allow meme coins to happen should happen. Now, here's going to be the really interesting point. If let's just say that people are right and we don't get a Clarity Act and we don't get anything and the Democrats continue to be the party of Operation Choke Point and the party of Biden's terror on crypto. Here's the campaign ad that writes itself for all the various senators and congresspeople running against Democrats who espouse these views. Gary Gensler caused and made Trump's ability to make that money by his policy. It was intentional. Gensler specifically laid a trap for the crypto industry by allowing meme coins and governance tokens that do absolutely nothing for the holder as legal because they don't give economic rights, thereby allowing grifters to grift, in fact, giving them almost a blessing to grift because they effectively said the SEC won't do anything about it. So Trump's family comes in and takes advantage of Gensler's policies and makes an absolute fortune. And so the notion that you want to continue those policies or bring them back is a good thing, that's twisted logic. And even dumb American voters who believe socialism works despite 5,000 years of human history are going to be really hard pressed when the quotes from Gensler specifically saying the SEC doesn't regulate meme coins come out and get used in campaign ads. And that's exactly what will happen, by the way, because if it doesn't, then the Republican strategists are morons. And I don't think they're that stupid, and I'm happy to help them. Not that I really care particularly about parties per se, although I do tend to vote more Republican. I wish there were some moderate Democrats that broke with the spirit of that party too. But let's just talk about crypto. Meme coins were explicitly allowed by the Warren Gensler regime because they knew they were worthless. And so what do? You allow the worthless and you regulate hard against the things that might have actual value. That's what they did. Now, that's probably not going to play well. I don't think those policies come back is the short answer here. But was it wrong that Trump grifted the market by promoting meme coins? Yeah, of course it was. Was it wrong? And did it take away confidence from crypto? Are people capable, in the outside world from distinguishing between, meme coins that drop 95% in Bitcoin that has a value, or a variety of other tokens that have values and cash flows potentially associated with them, et cetera, et cetera? Honestly, no. You talk to an average person, if you hear about crypto, they'll go, oh yeah, I heard about that Trump coin. It was really bad. And so it really took retail out of the market in America, and probably still has there's still lingering effects of it.
Yeah, when you see something like that, a Trump, a presidential meme coin, it really does mark the top, right? It's like, how do you get much bigger than that in the zeitgeist? And now we've got the confluence of crypto and Bitcoin together in the general masses' mind. So do you think that Bitcoin is seen as a Republican asset to the general voter?
I think that it has been associated and has taken quite a few potential investors out of the mix. It's hard to overgeneralize. Yeah. So I don't want to go as far as to say that, because it would be silly to say that. Mm-hmm. But on the other hand, there's no doubt that in a world where if Trump cured cancer, there'd be Democrats saying that cancer cells deserve equal rights. In that kind of world, yeah, you're going to have a problem. But I don't think most Democrats are that way, or most people are that way. But I think a lot of people are just disgusted by the whole thing.
I hear you. And it's sort of a shame, right? We had so much hope going into this presidency that he would be the Bitcoin president, strategic Bitcoin reserve, push this asset to the forefront of America's financial goals moving forward. We haven't seen so much of that. But the interesting other side of the coin that I've heard you say is that the number one best catalyst for Bitcoin would be a President AOC.
Undeniable. I mean, it's undeniable. I mean, you say whatever you want to say. Bitcoin, by virtue of the fact that Fidelity, BlackRock, and most of the financial institutions in the West are all have normalized it. It has futures. It has a wide set of products. It's past the point where they can regulate it out of existence. Plus, why would they want to? I mean, these people want tax. They want tax income, right? In Bitcoin, you pay capital gains taxes. I mean, I would expect the wash sale rule to go away in any new legislation, and it should. There's no reason why you should be able to sell Bitcoin and buy it back a second later to realize a tax loss, where you can't do it with equities. You have to wait 30 days. I would imagine the same thing will happen in Bitcoin. It probably should. So if you're a Democrat, you're a progressive Democrat, you're going to try to spend everything you can and tax everything you can. Well, what are the things you want to tax? Well, capital gains are great to tax. Even at current capital gains levels, they can make money. They'll get rid of the wash sale. And what are they going to do? Well, the one thing we know they're going to do is they're going to spend absolute tons of money. And we know that they're going to try to tax to keep up with it. And we know from economics that every time that happens, and I mean every time that happens, you never never tax enough. I mean, you cannot be, if you look at every single country that has gone more socialist, you see what happens to their fiscal situation and ultimately what happens to their currencies. But the US currency being the global reserve currency, that's probably not going to go anywhere. But what will go there is deficits will continue to go up. Monetization will go up. And yeah, I think that the alternative will explode. And that could very easily coincide with the next massive bull run. It wouldn't surprise me even slightly. And, does that mean I want a President AOC? Of course not. I don't, because I think that there's other really bad things that happens to the country. But from a Bitcoin perspective, I think that will be the case. Now, before people talk about the Republicans and Trump with his $2 trillion deficits, I think, as Lynn Alden says, the train's left the station. There's no way. The only way to get our budget and our deficit under control is through hypergrowth. And the only way to do that is to simultaneously lower long-term interest rates for business investment at the same time as massively cutting red tape and taking advantage of the AI boom to cause a massive amount of economic growth. Now, if you can do that, then you can get that deficit under control. But ask yourself what has to happen for that. In that scenario, once again, there still needs to be a significant amount of liquidity, maybe not as much under a true socialist president, but the amount of liquidity that is likely to come into the market is high. So I'm fairly bullish either way. I don't think that the Democrats are necessarily that much better, but I do think that the narrative about currency debasement will accelerate under a President AOC's type scenario. So that's why I said it that way. So it's a tongue-in-cheek comment. I kind of don't think that there's anything that stops it. The only real issue with Bitcoin is its internal self-sabotage, right? In terms of whether it's the debate over op return and which I'm not an expert on. I'm not going to claim to be. It's just that the fact that the Bitcoin community tends to self-sabotage itself and the fear that it won't be able to upgrade itself for quantum resistance and the concern that they may allow Satoshi's wallets to be stolen, which, by the way, actually would be a good thing long-term for Bitcoin, in my humble opinion. But I think those are far bigger concerns, and I don't think any of them are really going to derail it. And I think they're all being over concerned by people, meaning I think Bitcoin is underpriced at these levels.
Well, I want to get further into the discussion on the creep of socialism that we're seeing in the city that we love, New York City. But I want to double click on why you think it would be so good for Satoshi's coins to be stolen in a quantum threat.
Well, it's not that I think it would be so good. I think that there's this overhang, right? The people are like, well, Bitcoin's 21 million, 21 million, 21 million. As Gary Cardone says, that's a bunch of bullshit. Maybe the number's 16 million, maybe it's 17 million, maybe it's 18 million, but it's not higher than that. And so all those coins that are lost, stolen at the bottom of landfills, they're not really at the bottom of landfills. They're the keys that are at the bottom of landfills and I think I know that. So before people start calling me, hey, boomer, the coins aren't in the landfill. No, I understand. I understand it's the whichever device that held the keys is there. The fact is that float in an asset is not necessarily a bad thing. Bitcoin at 21 million is fine. And this notion that somehow the 3 million or as many as 6 million, if you believe the more hyperbolic estimates, I think more like 3, could become part of the asset again by quantum computers being able to recover them is no big deal. I mean, all you have to do is look at, or you're about to get a really good idea with SpaceX. People are buying SpaceX at this valuation knowing that 95% of the float is not trading. Think about that. And in Bitcoin, they're worried about what? Maximum 40% of the float, maybe 30. And it's probably more like 15 to 20. Who cares? I mean, why would someone who spends billions in quantum computing become a big seller? Why? Why would they all of a sudden want to crash the price? The people who think these things are, to be blunt, Rob, morons. I mean, really dumb people. If you acquire multi-billion-dollar asset, the last thing you're going to do is take steps to make the price go down. In fact, you want the price to go up. So if you sell it, you're going to obfuscate it. You're going to move it to what you're going to make it so that people don't know what the hell you're doing with it. And most likely, you're going to be holding on to most of it. Because if you thought it was valuable, that's why you spent the money to build the quantum computer to get it in the first place. So going from unknown hands where people worry every day about Satoshi wakes up and sells it to strong hands of some of people who have invested like crazy to get it. And by the way, it's dispersed, right? This is not one wallet or one pot of gold. It's most likely it will be in multiple players that actually do this. It's not, Q-Day isn't one day where one super genius decides to scoop up 30% of the world's Bitcoin. But even if they did, they could do what Ripple Labs did and stick it in escrow. And then what do you do? Right? And then what do people say? Oh, wait. Oh, it's like, I'm not saying they're going to, by the way. I'm just saying that the whole fear of it is way, way overblown. I hope that makes sense because,
completely.
It's just the entire premise is based upon this notion that whoever spends billions of dollars to acquire that much Bitcoin would do so in a self-destructive, catastrophic doom loop. It just doesn't make any sense.
And when it comes to the decision to either freeze Satoshi's coins in the fear that they might be stolen or let them be there as sort of buried treasure ready for a quantum computer to one day possibly steal them, I believe you have to go to the foundation of Bitcoin, which is property rights. And if you control the keys, you control the Bitcoin. So if someone is able to create the technology to crack those public keys and steal that Bitcoin, then I guess it is rightfully theirs because they can move it.
I am sympathetic to that, but I'm a practical person. If the community did come together to freeze the coins and we decided to have a lower supply or to change the mining schedule to extend it out beyond 2140 or whatever it would be in order by putting them back into the mining pools, I mean, fine. I don't care. I don't think either changes the fundamental premise of Bitcoin. I personally, as I said, I'm fairly ambivalent. I don't think either scenario is bad for the asset. I think arguing about it as if the world depends upon it is what's bad for the asset.
That makes sense. And when it comes to property rights, that is what America is widely based on. And as we were saying before, socialism seems to be creeping in, as we're seeing in New York City with the rise of Mamdani. You just put out a post today saying that this rent freeze that he just enacted is one step closer towards confiscation.
No, it's not one step closer. It's part of the confiscation plan.
Explain.
He was clear about it. He said it. I'm not. This isn't a conspiracy theory. There's no tinfoil hat on this head, dude. I mean, he specifically said a couple months ago that if landlords are irresponsible and can't maintain their units, that the city will take it over. And he went so far as to say that the city will do so and turn the operations of these buildings over to non-governmental organizations, which are charities, right? What are charities? They're charities that pay his friends very large salaries, take huge profits, despite the fact that they're nonprofits, to their pool of friends, and will operate all of these buildings. He said that would happen if they're irresponsible. Well, now, if you freeze rents in a world of inflation, what happens to a landlord? Well, a landlord can't fix the air conditioning when it breaks. Why? Well, because the rent is $1,000 a month. It costs them $1,100 a month to operate it. And so they're bleeding money, hoping that Mamdani will leave office and they can sell the building to somebody. There was just a story 2 days ago, I think. I forgot which hedge funds sold their stake in rent-controlled operated apartments at 6 cents on the dollar. 6 cents on the dollar. Because they are going to zero. These businesses that are operating these things are going to have to abandon the buildings. What happened in the Bronx in the 70s is happening again. The difference is, instead of it just going derelict or burning, and by the way, burning might happen depending on if they're insured, right? I'm not going to say that people are going to set arson's going to happen on purpose, although frankly, there might be desperate enough people to do that. But he told everybody that he was going to confiscate the buildings. And that is the absolute epitome of socialism. It's exactly what happened. I mean, we had a housekeeper nanny, a few years ago who came from Soviet Georgia legally. And she told the story about how her family in Georgia, before the Soviets took over, had, property. They had, a house, et cetera. And then they were told, well, you can live there, but you're now going to have 15 other people living with you in the you no longer own it. That is literally what's happening in New York City right now. Now, you could close your eyes to it. You could say, oh, this is great because after all, the rich have too much. Landlords are rich. Actually, that's not true. Most of the landlords operating these buildings aren't slumlord, Scrooge McDuck types anymore. There are quite a few of them who are hurting. It's a very bad business right now, and it is not good. So yeah, it's not a conspiracy theory. That's literally what he said. And it's just that people have their heads in the sand like ostriches. They just don't want to believe that this could happen in America. There are lots of things that are happening today that should not be able to happen in America. That's just one of them.
So we are recording this on 4th of July weekend. And let's take stock of where America is right now. 250th anniversary of the signing of the Declaration of Independence. You are a man who knows his history, has studied empires, rise and fall of the past. What would you say is America's outlook moving forward for year 251 and forward?
Well, it's an interesting question because if you compare, there are eerie similarities between 2026 and 1976. And I was alive in 1976. I was in high school at the time, but I was aware of it. And I studied economics in college from 79 through 83. And during the 70s, we know that was a really dark time from economics point of view. We were, it was a very severe recession. It was when the gold standard had to be blown apart. So the first set of double-digit inflation, we had, double-digit inflation and double-digit unemployment. The misery index was off the charts, as they call it. But budget deficits were 30% of GDP. We're at 130% today.
How many apps does it take to manage your Bitcoin? One to buy, one to send, one for Lightning, and another for loans. That's a lot of friction. Well, now there's Rhino. Listen to the end, and I'll tell you how they'll set you up with $10 of free Bitcoin. Rhino is a next-generation Bitcoin app that makes living on Bitcoin easy. At Rhino, you can buy Bitcoin with zero fees. Get a Bitcoin-backed loan right in the app. Move cash globally over Bitcoin rails fast and easy. Automate your stacking with a DCA plan, so your stack is growing, whether the market is up, down, or you're touching grass. And it doesn't stop there. Bill pay, debit and credit cards, as well as retirement accounts are all coming soon. At Rhino, your Bitcoin is never rehypothecated. Security comes first, with biometric verification, 24/7 fraud protection, and the ability to move your Bitcoin to self-custody whenever you're ready. Click the link below in the description and download Rhino for iOS or Android. Use code Bitcoin News and Rhino will drop you $10 of free Bitcoin right into your wallet to start you on your stacking journey. Get the most Bitcoin for your dollar with Rhino.
As bad as it was in the 70s, there was room to do something about it. Now they figured that out in the great financial crisis and exploded government debt and exploded spending. And so now we face something very different. We now face a world where the entire world, the entire civilized world, outside of Switzerland, pretty much every single industrial nation runs massive deficits. And so the currencies of the world are an illusion. And they're an illusion that is necessary to maintain control over the people. In the case of Weimar Germany, which everyone always points to, remember, Germany was an outlier state. They were beaten in World War I and had to take enormous reparations and whatnot, but it wasn't the entire world. A hyperinflationary collapse on a global scale is a really difficult thing to imagine. It's difficult because and if you can't imagine it, then it won't actually happen. So, but you will see a bleed out of currencies, I think. From a social point of view, we've had decades, and I mean 40 years of bipartisan policies designed to create a wealth gap. And that is now reaching a crescendo here. I am not in favor of these policies, by the way. The two policies are unsound money, exactly what I've been talking about, monetary printing, debasement, etc., which that inflation goes into asset prices directly, right? Because that's how money is valued. Consumer prices at the same time have been kept relatively muted. Why? Because we've had massive technological advances between the Internet of Information and now AI and lots of everything from fracking, which kept the cost of oil production basically flat for 40 years. It is staggering, how little consumer inflation we have relative to asset inflation. But here's the problem, Rob. What's the most important asset for people to consider themselves as part of the American dream? Well, it's your house. But houses are financial assets, and their inflation has been off the charts. So what used to be affordable to someone on a normal salary is no longer affordable on a salary. The home prices compared to average earnings are not even remotely close, and that is causing enormous amounts of discontent. Now, will people be able to be persuaded that renting is okay? Maybe. I don't know. I'm not gonna tell you what's happening, but that's why socialism is doing what it's doing, because people legitimately are concerned at this accelerating wealth gap, except for these two policies. And I mentioned one, which was unsound money. The other is regulation, because what happens with regulation? People say we have a capitalist system in America. That's a bunch of horse shit. We have a cronyist system. Yeah, we have some freedom in markets, but we have 14,000, I think is the number. Maybe it's 12. I don't know. It vacillates. K Street lobbyists in Washington, D.C. And their entire job is to rig the system for their large corporate employers against the average person, against disruptive competition, et cetera. We see it in crypto every day because we have this thing called the Genius Act, which passed, and now the big banks are trying to stop crypto regulation because they don't want to see their oligopoly threatened. We see it in pharma. We see it in agriculture and food. I mean, travel through Europe and you understand that in America, the rule for food is if you can't prove that a food additive, a pesticide or herbicide, a emulsifier is dangerous, if you can't prove that it's bad, you're allowed to use it. In Europe, you have to prove that it's good if there's a suspicion that it's bad. Now, that's the exact opposite of drug safety, by the way. But they got that passed years and years ago. And so as a result, we have glyphosate in our wheat production. We have potassium bromide, titanium dioxide in flour. There's a large laundry list of emulsifiers and other additives that are used. In fact, most of them don't even have to be disclosed in America. And so everybody who's ever spent more than a week in Italy, for example, feels better. And they wonder, well, why do they feel better? Well, they feel better because that stuff's they're not being poisoned. But that same thing is happening in every single industry. The big companies, the big farms are, big farm operators squeeze out the locals. It's the same thing in pretty much everywhere. And that matters because if you go through economic history, Rob, the one thing you know is the largest engine of growth and social and economic mobility is small businesses. And small businesses are being squeezed in America. And they're squeezed by cronyism. They're squeezed by regulations. Someone made a point that compliance costs to enter an industry, and it doesn't matter which industry, I know about finance because it's big, is massive. Fixed costs. But here's the problem. A 2,000 person company can easily pay a fixed cost that applies to, okay, you got to hire 5 more people. Now try that with a 10 person company. It's that big of a difference. And so you have this throughout the economy. And at the state and local level, we have permittings and everything else where if you're not in the crowd, you can't get it done. Hell, look at people like home builders who are small home builders who want to move into markets. You know what they always do? They do their first projects with larger home builders. Why? Because they have to be able to smooth the palms of the people in the city governments. Mm-hmm. It's the same. It is up and down. The corruption is up and down. The entire NGO system, is just a massive grift. All of these things have perverted the capitalist system. So when people say socialism versus free markets, that's not really that's great politically. But the truth is, what we really need is a return to free markets, a return to property rights, a return to being able to grow in a true sense. We don't have that right now. Now, sure, some monopolies that happen because of success, and that can be a problem. There's no doubt. I mean, I'm not a fan of the way Apple runs the App Store or, Google's running the Android store because it's a duopoly, right? And so, yeah, there might be some reasonable antitrust things that should be done. But that's not the same thing as what we have today. And it's certainly not socialism because the one thing you don't want is the government doing it, unless you think the government's going to be efficient, which they won't be because they never have and they never will.
And as Bitcoiners, we all look back to certain dates like 1971, when the dollar got removed from the gold standard as the day that the money broke. But in terms of this cronyism, it feels like a slow creep. Over your career, would you say there was any main event that really things changed completely afterwards, or is it just a slow push over time?
Oh, it's a slow push over time.
Yeah.
I mean, 71 isn't the day that the money broke. 1913, or the creature of Jekyll Island, is when the money really started to break with the creation of the Federal Reserve. But what happened in 71 was Nixon's hand was forced. The Bretton Woods Agreement forced America to give their gold up if, in fact, people asked for it. And we were running deficits at the time such that gold supply would have been empty. Now, I say that tongue in cheek because we haven't had an audit of our gold supply, forever, basically. It's been a very long time. And despite the campaign promise to audit the gold supply, weirdly, it hasn't happened. Now, once again, not putting on the tinfoil hat, but I'm not so sure it's there. And that's a pretty good example. In terms of things that were important in the creation of cronyism, it really starts with FDR and the New Deal and the idea that the government should run things in the economy. But it's under both. It happens under pretty much every single president of both parties. Both parties are involved. And if you want to know why and how you could tell this, it's because when Elon was first put in this Doge role, the first thing that he said was we need to stop this NGO stuff. Now, U.S. aid was easy to do, relatively speaking, because it was so obvious. People like Mike Benz, Mike Benz Cyber, have documented this to the point of absolute proof that U.S. aid was set up as an extension for off-the-book CIA operations and then was co-opted by the people who ran it. We knew that. That's very clear. But that's just the tip of the iceberg. The fact is there are just enormous numbers of these organizations, and the grift became obvious because you can employ family members of sitting congressmen and senators. You can employ family members of staffers in the Congress and the Senate or staffers in the executive branch. Both parties make a lot of money by having family members sitting and operating these, quote, charitable boards. Frankly, many rich people do, except for what is the problem here? Well, what Elon said is most of it is waste, and a lot of it is pure corruption. And rather than create audits or structure to stop that, they stopped him. Why? Because both parties are making money from it. Yeah. And so you couldn't get anywhere. So once you have that kind of structure, it's very difficult. The entire notion of tax-exempt status in a company that can pay more than the salary of a senator to their chairman is insane. I mean, it'd be a very, very easy set of rules to say you can't qualify as tax exempt and you pick your locality, you can pick a state senator, you can pick the governor, it doesn't matter. Pick a number of above this if you're paying people, and by the way, you have to deal with expense accounts. You can't have an expense account, right? You have to be audited, et cetera. You could audit this away, but that's like asking politicians to say, wait a minute, I can't live on my congressional salary. Because they can't. I mean, they make very little money relative to the power where they would be if they're in the private industry. So what do they do instead? Well, they get all this NGO money and they get the ability to trade on insider information. Yeah. Is that what we really want? No, but that's the grifting situation that we have. And this is very hard to unravel because the average voter certainly has no clue.
No, they don't. But those who put their time into learning economic history, they see that hard money is a solution, a way to to bridle the government and make sure that they can't get over their skis in terms of spending.
That's the key. The key point you just said. You should repeat that. Bridle. In other words, when you say the word bridle the government, what you mean is create a measuring stick by which it is obvious what the government is doing. They are spending money in a way that is harming people. Inflation is a stealth tax. And whether it's consumer inflation, people get mad when the price of gas goes up. They get mad when the price of hamburgers go up. They don't necessarily get mad when the price of houses or stocks go up, but it's still a stealth tax. Via capital gains, it's still a stealth tax because it costs more to buy things. And by the way, productivity doesn't help with things like education because it's services or medical care. And so people get really screwed by those costs going up. And so, but they don't necessarily associate it, right?
Yeah.
People get much more angry about the visible signs, but the visible signs are not really the important problem because that'll probably get back under control. Once gas prices come down, then, the cost of hamburgers and steaks, okay, whatever. I mean, it is what it is. But it's still a tax. It's not good. I'm not saying it's good. What I'm saying is this notion that assets going up is good is true if you're rich, but it's not true if you don't have assets.
Well, the one asset that we've put so much time into is Bitcoin, but it's languished, right? These last 8 months have been really brutal if you have put a lot of time and energy into Bitcoin. How do you explain it? Is it just a 4-year cycle?
I don't like the word 4-year cycle, although look, human psychology is human psychology. People will do what they're going to do. October 10th was a massive deleveraging event, right? Not terribly different and not straight on a 4-year cycle like Terra Luna was, but it was a massive deleveraging event. And when that massive deleveraging event happens, retail is going to flow out, confidence is going to drift, and it went far more than I expected. Look, I thought 90 was the bottom. I'm not going to lie. I was wrong, right? I now think 60-ish is the bottom, but, note that it could go lower. Whatever, it is what it is. I'm not selling here, but the point is that cycles of human emotion are accurate. So you see things like the famous meme, $120 guy selling Bitcoin lines out the door, right, at his table, and the guy selling $60 Bitcoin is alone, and there's like nobody there ready to buy it. And that is human nature. But you have to ask yourself the question, what else is going on here? Well, there are two other things that are going on. Thing number one that's going on is entirety of crypto. There's a lot of crap. It just is. There's a lot of tokens that have absolutely zero reason to exist. Projects that may deliver infrastructure but don't have native value. You could look at it from the ridiculous meme coins, and I don't want to go down through all of the ones that are pure memes, Trump token being one of the most obvious ones because it's almost infinite supply. I mean, what's the point, right? It's not like an NFT where you have provenance and say, okay, I own this piece of art signed by the whatever. You could make an argument on NFTs at least. All the way to tokens that don't matter. So Polymarket's been a massive success. Everyone understands that. The token that it's based on, though, has done virtually nothing. Yeah. Why? Well, because the token really wasn't necessary, right? The ecosystem was necessary. The tech was necessary. The equity, people who own Polymarket, okay, they're making a lot of money. But that's the difference. That's the trap that Gensler and Warren basically, they dug the hole, they put spikes in the bottom of the hole, and they put leaves over the hole. And they said, okay, you guys can build memes and you can do governance tokens that give your holders no rights whatsoever. But you can't pass on economics. You can't give ownership, right? Either in a product, in a market, or in a company. And that caused greedy people in the token space to say, okay, we're going to issue these tokens because we don't have any regulations against it. We can raise money. And then people put their money in there and the money gets flushed. When people start putting money into products and the money gets flushed, they leave. And they leave in droves. They leave for a long time. And then eventually the newer products come in that have actual paths. So if you look at a token like Hype for Hyperliquid, Hype is directly associated with the revenues of Hyperliquid. And so, I'm looking at the price of Hyperliquid, and it's been up and down and been volatile, but at least you could understand it. It certainly outperformed a lot of others. That's the thing about the crypto world. Now, Bitcoin may be the lead sled dog that moves the crypto market around, but it is also subject to the fact that when people have malaise in the crypto market, they get malaise about Bitcoin too. None other than Jeremy Grantham stands up and says, and he's a bit past his sell-by date, I'm not going to lie, but he was a brilliant investor in his day. And, he equates the two. And it's just absolutely absurd. I mean, it's not true. The point about Bitcoin is that it is a asset that has the characteristics, the literal almost perfect characteristics of a monetary store of value, of money, right? The only thing that it doesn't do is it isn't scalable to be used by everybody in every single transaction on its own. That it's not. That's basically the only thing that it can't do. But, as a settlement layer for finality, yeah, it's fine, and that's something that people don't understand. But you have to go through all of it. And that has happened. And so post October 10th, with this massive deleveraging event and hundreds of thousands of people wiped out, you saw the fleeing of retail. And at the same time, what's been going on now for over a year is a massive, and it stopped recently, but is a massive distribution of older holders of Bitcoin to newer holders of Bitcoin, from whales that bought in, to use Gary Cardone's terms, from the 300s to the 3000s, whatever, to people who have bought in from 30,000 to 120,000, right, via the ETFs. Now, that has to happen for Bitcoin to gain its critical mass of adoption, for people to believe it is going to replace or move alongside gold as a global store of value. Has to happen. It doesn't make it less painful. But when you combine it at the same time as a massive deleveraging event and the psychology of a cycle based on the having or not, and human emotion being what it is, yeah, you get where you are today.
Yeah, October 10th, definitely something broke, right? And as somebody who has studied and knows so much about market plumbing, is it just that people got flushed out because of leverage and they left? Or was there something fundamental beneath the surface that we can't really obviously see that changed that day?
My theory, and I've written this, is I think that this was one of the episodic times of momentum ignition manipulation that happened to happen at a time where the market was unbelievably vulnerable to it. And so, we've seen these before many times, actually, where, because the structure of the market is interesting in the case of Bitcoin in particular, but it's true in all of crypto. It's true in a lot of financial assets, actually, where the futures markets are 5 times more liquid, right? 5 times. So what does that mean? Imagine you have a fair amount of capital, and you can buy Bitcoin and sell futures over a period of weeks to build up this huge position, long Bitcoin, short perpetual swaps or short futures, whichever, it doesn't matter, but perpetual swaps work better. And you could do so when funding rates are low, so it's not costing you to hold that position. So you could build it up and up and up and up and up. Now, you have this huge position, and you do it in Bitcoin, you do it in Ethereum, you do it in Solana, you do it in Polygon, you do it in, what was the one that went really Sui, you do it across the board, all of crypto, and you just do this slowly. And then on a weekend, when liquidity is the thinnest in the spot markets, you pull the ripcord and you start dumping those long positions, and you're selling all the way through the book. Now, a couple things to understand. When you start selling spot in a book, the majority of liquidity is focused around the best bid and best offer. For every percent away from what was the best bid or best offer, it takes significantly less quantity to sell to move it another percent and another percent and another percent and another percent. So the price could really cascade significantly. So you could sell, and you start selling at where there's a lot of liquidity, you get your average sell price from where you sell it to where it goes. And your average sell price could be somewhere, down here. In the beginning, it'll be there, it'll be down here. But now you don't have to buy any futures yet. You start buying your perpetual swaps lower than that as it cascades. Auto liquidations trigger in the perpetual swaps. And so you could sit and wait for the liquidation. So you could be selling, pick a number. Let's say Bitcoin was on October 10th, 120. And you could sell from 120 down to 110 and get most of your stuff sold, but keep selling, push it down towards 100. You don't have to start buying your perpetual swaps back into the 90s. And think about the amount of profit you can make on doing that trade. Now, this has happened before. It happens all the time. The problem was it happened in a period of time when the market was terrified of what was going on. And so it caused, I use the analogy, it's like, the poor arsonist who's just trying to burn down a building, and it turns out that there's a supply of thermite in the basement of the building, and it takes out city blocks instead of just the building. It's more or less the same thing. So it triggered this widespread panic and this much larger reaction than they expected. I mean, I'm sure they made a lot more money than they expected to that day. And I don't know how many firms did it or who did it or whatever. The fact that it's never been investigated drives me friggin' nuts. It's why one of the reasons I'm actually pro the CFTC getting involved, and I've written about this, so I understand it. But the point here, Rob, is that happened. It went way beyond what it's done in the past, and it literally wiped people out. Lots of people, hundreds of thousands of accounts got wiped out that day. And so the net result of that is the aftermath of that are people, even if they rebuild wealth to be able to invest, are they going to trust it? Yeah, that's the issue. It takes time, and that's where we are today.
Yeah, people got scared. There was definitely some heavy hands, some manipulation going on that day. But one of the silver linings since then was that the ETFs held on, right? These people say that the boomers held on, but June, $4.5 billion worth of ETFs were sold. Wouldn't it be funny if the ETF holders had gone through this whole entire bear market and then just sold the bottom this last week or so? What's your take on that?
It would be typical.
Yeah.
That is a typical thing. But understand, once again, it's not monolithic. ETFs have still been, there were predictions, people like Jim Bianco, who predicted that 50%, 70% of the ETF buyers would sell. That we're not even close to that, right? The amount of selling is a small percentage, relatively speaking.
True.
So let's understand that. It's not as bad as you think. But yes, the pure retail crowd, people who give up. James Lavish made the point, and he's right, that what happens in quarterly rebalances, but the two biggest ones are June and December, during quarterly rebalances, people sell their losers and buy their winners to make their professionals do this, to make their portfolios look better for attracting further investors. By the way, that is exactly opposite of what every single rational professional investing advice tells you to do. They always tell you to, they tell you to cut the losers and sell the winners. Yeah, that's true. But you have to look at it from a time point of view. So if you do that strategy, what's going to happen? You're going to see that kind of dumping, in June. It's just completely normal. So I'm not terribly nonplussed by that. I just want to go back to the whole point of why the ETF holders have been like that. Sure. It's because of my theory has always been that Bitcoin trades like an option on its own adoption. You're buying it because you believe that Bitcoin has a material chance of becoming digital gold. Digital gold, to put numbers on it, if you look at gold's monetary value, I think gold's monetary value is somewhere around 80% of gold's total value. And you get to that by comparing it to platinum, which is much rarer than gold, by the way, has historically been considered more valuable in jewelry, to the point where older women still value it that way. Younger women are like, no, gold is more expensive. Right. So, but you could go through the math, and I've done this before multiple times. You can compare it to silver, where silver is 1/15 as rare as gold in the Earth's crust, but traded as bad as 1/100th of value. And the reason is silver got demonetized over time because it became hard for it to be used. So you could decide on your number. Based on those metrics, Bitcoin is trading at well less than 5% probability of it becoming that digital gold. And so if you're an ETF holder and it drops 50%, okay, but it went from 7% to 5%. Is that going to matter if you're holding this money for 30 years from now? The answer is no. The answer is if you're caring about next quarter, yeah, absolutely, I'm going to sell. But long-term holders are saying, look, what's happened with this bet? Is it more or less likely today than it was when I bought it? Now, it depends than a year ago. I think it's probably about the same. But 5 years ago, it's significantly higher probability. The network, despite the exodus of compute power to AI, is still 6.5 times stronger than it was back when Bitcoin was last at these price levels in the euphoria of the last bull market, right? So you ask yourself the question, is this more or less likely? And the answer is, well, no, it's more likely, significantly more likely. So why should the price be at this level? And so you hold it, and it really depends. So people who have Bitcoin as a percentage of their portfolio or have significant conviction don't sell. The ones who have a trading position, they did sell. And that's why it gets flushed. And so that's why you see selling down, down toward 58. That's why you're seeing this level being so important where it is today, relatively speaking. I tend to think it will hold around these levels, but, we'll see. I would not be surprised to see it float back up. It could be another rally, and it could get sold into and have a cycle bottom in September, October. That's possible. Anything is possible. But you have to ask yourself, why do you own the asset in the first place?
And one man who knows why he owns it is Michael Saylor. He believes it is the foundation of a new financial universe that he is helping to build, but he is under fire. Of course, we both know that he is not under any threat of being liquidated or anything like that, but his whole entire model, especially now with these preferreds, is under question. So I know that you don't necessarily agree with the way he marketed them, but you still believe in the strategy thesis. Tell us where you're at.
Yeah, so I think, look, there's a few things here that matter. First of all, let's understand what is strategy common stock, what is STRC, and what are the other variations he's created. I hate the name digital credit because it's bullshit. It's credit. The fact that it's based on a digital instrument doesn't matter. So let's talk about what is strategy. Strategy is a leverage play. He is using every trick that he can come up with, as well as potential future tricks, such as being able to create banking on top of Bitcoin when Bitcoin finally clears FASB and Basel rules to be usable in the financial system. Right now, it is punitive in terms of the way it's treated as an asset. So strategy is a leverage play on Bitcoin. Strategy will, with absolute certainty, outperform Bitcoin in a raging bull market to the upside. It will absolutely underperform Bitcoin in a down market. And it will also underperform Bitcoin in a sideways market because it introduces time decay, because they're paying dividends, they're paying things out, they have cost of operations. No one should be surprised by the fact that Bitcoin's dropped 50% and strategy has dropped 75% from its highs. Nobody. It's exactly what you would expect. And so people come up with all these ridiculous explanations and et cetera. It's just wrong. STRC, the perpetual preferred, is effectively a high yield instrument. It's a clever high yield instrument because it has been created to have the corporate discretion to keep it from making the company implode, i.e. there's no forced liquidation, they could cut the dividends if they want to, et cetera. They've shown no indication they're going to do so, but it is a high yield instrument nonetheless. Anyone who's willing to pay 12% dividends to investors to borrow money at 12% to buy an asset, that's high yield, right? But there's two different ways of looking at a high yield instrument. Almost all of them, companies borrow and have bonds that pay much higher than prime rates or much higher than they could get because banks won't loan the money. They issue these because they believe their business plan is going to pay off. And this unproven business plan may or may not pay off with enough earnings to cover the dividends, et cetera, et cetera. The world is replete. It's actually funny because if you look at Elizabeth Warren, her favorite topics are like private equity guys. A lot of private equity is built on this high yield debt, where she complains that, stores go out of business because the high yield guys come in, the private equity guys come in, they buy the stock, they borrow tons of money at high interest rates, taking out their equity value, and eventually the business stalls and can't afford to pay it. So now why do I mention this? Well, because the difference between STRC and the average high yield bond, although this isn't a bond, it's preferred stock, is that the credit worthiness of the company that has issued this, in the case of a business, is based upon business execution. In the case of STRC, it's based on Bitcoin's price. So if Bitcoin's price stays at 60,000 for 5 years, 10 years, or drops to 20,000 in 5 or 10 years, they're going to have real problems. Strategy is going to, as I said, that time decay will cause it an issue in the far future. If Bitcoin over the next 5, 10 years is going to be worth more than it is today, then that interest rate probably has a lower credit risk than most high yield debt. And that's how you should value it. Now, you could make your own decisions of whether it makes sense to buy or sell or when to buy and sell. Was it a good trade buying it in the 70s? Is it a good trade buying it at 87 today? I don't know. I personally think it was a good trade buying it in the 70s. I'd say today it seems fairly priced given those risks. Frankly, if I believe Bitcoin, which I do, is going to be worth a lot more in 5 years, I'd rather own Bitcoin. It gives me more upside. Right? But if you're in a fixed income fund where the only thing you can do is buying yield instruments, then maybe it makes sense as a bet. And that's what people don't understand, Rob, is our financial system is built into pods. It's built into categories where money is placed into either debt or growth categories of where what you're looking for. And there's a lot of money that's only debt oriented. And so if you're debt oriented money, it's just a question of, do you believe the credit? Mm-hmm. And if you think Bitcoin's going to go up, then their credit is really good. And so you buy it. And it's that simple. And so if what Saylor is saying is, listen, it doesn't make sense that people, put their money into these categories of credit or whatever, and it's trapped there. And we're going to create digital credit to help them out. What he's really saying is, listen, we're more credit worthy because the asset we own is going to be worth more. So you may as well get paid to do so. So that's what he's saying.
Yeah, and I understand that. I think my biggest question with all this is who is it for, right? 80% of the buyers of this product are retail, and it was sold as a money market like fund product that was going to be stable, and then it drops 25%. Right. And you have the stories of people who got their dad on it on X to put his retirement in it. And now he doesn't know where his money's gone. Right. Who do you think is the right product market fit for Stretch?
I mean, it's fixed income money that is high yield fixed income money that knows what its risk tolerances are. It has to be. So, I would say a couple things. I am not happy about the way it was marketed. I never bought it myself, just so you know. That doesn't mean I don't believe in Bitcoin. I do. I just didn't see the point of using, of trying to use it as a savings account. And it has what is a clear, not hidden, a clear risk that if Bitcoin drops, your dividends are going to get suppressed. The price, what would happen? That was always a risk. I don't like the way it was marketed. I don't like the way that he cheerled about it. He did have the appropriate disclosures, etc. I want to make 2 points. Point number one, I generally agree with Saylor's view of where Bitcoin is going needs to be in its place in the world. So that's very clear. I do agree with that. And I think that sometimes he portrays it well, sometimes he portrays it too philosophically, sometimes there's too much promotion. When his company's credit on an instrument is directly related to it, I think that there might have been a line that he went over, but so be it. I would say this, however. Maybe the single worst investing decision made by people that I know was when Elon Musk said that with his famous $420 funding assured tweet, and there were shareholder lawsuits against Tesla. I know a lot of people who said, these shareholder lawsuits are going to be really bad, and they sold. And yeah, it went down like 10, 15, 20%, whatever. Had you bought instead of selling on that day, you were up 15x, 15x. Had you bought at the bottom of the selling, you're up 25x. I think those are the numbers. Maybe it's 22x. I don't know, but it's a lot. It is probably not a great idea to be selling strategy on the basis of shareholder lawsuits that are well understood, well telegraphed, and frankly do not have a history of causing what people think they're going to cause. Unless the SEC, and it's going to be hard for the SEC to do this because the official documents have the right risk disclosures. Now, one of the things that I think the SEC should do, I've been saying this for years. I've said it to friends who are at the SEC, and frankly, internally, off the record, they agree with me, is that rather than burying disclosures in prospectuses, make a clearer, more common man understanding of risks, rather than all the stupid risks, but the real ones, the standard. Mm-hmm. So, I mean, it is that simple. But we'll see. I think that's worth talking about. And the notion that he'd be forced to sell or that, he would do things. Look, my criticisms of the way they run their business is that their trading methodology has been sophomoric, which is not good. Right, in the beginning they did. In the beginning they used a competitor to CoinRoutes, a company that I co-founded, with my son that Ian is running because I've stepped back from the company, and it was mostly his idea anyway in the beginning. And they used a company called Tagomi, which was bought by Coinbase to build algorithms to trade. And over time, I don't know what's happened, but this smash top buying as opposed to DCAing and the way they could sell, there's many smarter ways they could trade. None of that is going to matter in the long run. What's going to matter in the long run is does the price of Bitcoin continue to appreciate from cycle to cycle to cycle? And if it does, they're going to massively outperform. And the credit risk on something like Stretch is going to be great. And what will end up happening is the dividends will decrease and decrease and decrease over time because, frankly, there's no need to pay that exorbitant amount of excess compared to what is the normal risk-free rate. Mm-hmm. But you're right. There are people who went into Stretch and the dividend payments are still there. They're still getting paid, but now they're worried about the money. So if they put money in that they didn't need and just wanted to live off the interest, they're fine until they're not, if things really break. And that's where all the fear comes in. And so that's where the selling came in. So once again, people who absolutely, had they done nothing, were probably okay, sold the bottom again because of fear. Greed and fear is a funny thing, Rob, but it generally takes money from the non-professional investor and puts it in the hands of the professionals.
Yeah, and patience is always rewarded, right? It seems in these markets.
Not always, no. Patience, it is important to understand that patience is rewarded in situations where information hasn't changed. Like, for example, if you're invested in a business that is being disrupted by artificial intelligence and you're patient saying, oh, I'm sure they're going to figure it out. Well, maybe they won't. We've seen this story before. On the other hand, if you're invested in an asset class that stands to benefit massively from the increase in agentic commerce, and Bitcoin, by the way, is one of those assets, then understanding that meta trend, you should be patient and let it unfold.
Well, Dave, I feel like we could go on for hours and hours, but I want to leave this conversation on an optimistic note. I mean, we've had the ETFs, we've had digital credit. There's been many ideas as to new catalysts to push Bitcoin to a new stratosphere. What do you see coming down the road that could really push Bitcoin to the hundreds of thousands of dollars mark?
I will say it again. Bitcoin is an option on its adoption as a global store of value. Gold and Bitcoin are both going to continue to get pushed by the massive amounts of monetary printing. And the more and more people that understand this, the more and more likely it will happen. And so, we just had, people looking at M2, going on. We have a government in the United States, right, which wants to and owns a fair amount of Bitcoin, that wants its price to go up and believes in it. But we'll see. Does that matter? No. What matters is adoption. Adoption. At a certain point, it becomes self-fulfilling. And I actually think we're past that point, and the market is just dramatically underpricing it. We saw the same thing. We've seen the same thing every time there have been massive crashes. So post-dot-com bubble, Amazon traded just stupidly, even though it became obvious. Once they were no longer just a bookseller, its prospects were so much larger. Once NVIDIA gained such a big technological lead on chips for graphics processing, which then became both Bitcoin as well as, and then Ethereum and then AI chips, it became obvious. And so if you could go back in time and say what was obvious, I mean, we all have these obvious moments in our time. I mean, mine was Cisco. I remember working, building a small, within a small brokerage, building a global business and finding out that Cisco's routers were more than 10 times more price performant than Cabletron Systems, which was a much bigger company at the time. And I thought, oh, wow, I really should be investing in this Cisco thing. And I thought, well, let me build my business. I'm not going to worry about that. Of course, Cisco in those days, it went up 10,000% from there. Mm-hmm. So, we all see them. This time, I just know what's happening with agentic commerce, and there are certain things that are going to do extraordinarily well, and there are certain things that won't. But you got to look at supply and demand, right? We need to see more evening out of the holdings of Bitcoin for it to become that thing. No one's going to accept a global store of value that is perceived to be owned by a bunch of hoodie-wearing, cypherpunks, and they control 80% of it. That's just not going to happen. And they don't control 80% of it anymore. But the point is, that isn't going to happen. They may think it's going to happen, but they're delusional. It needs to be controlled by shareholders in BlackRock, right? In BlackRock funds, and, shareholders of Strategy and shareholders of Fidelity's funds, et cetera, et cetera. That needs to be the case. This takes time. The most important catalyst is time and growth. And if you understand anything about power law, you understand that adoption of technologies tend to accelerate on its own into what looks to be catalytic, even though there's no particular catalyst to make it happen.
Well, there we go. We'll leave it on that. Dave, thank you so much for your time. If people want to find out more about you and your work, where should they go?
Well, at DM Weisberger on X, because my original account got hacked, so which was at Dave Weisberger. It is worth mentioning that I spent a lot of time over this past year writing a book, which is going to be published by Wiley in February.
Nice.
It's called $1 Million Frat Boys. how technologists change the game on Wall Street. And it will be very funny because it tracks the earlier parts of my career of how technologists interacted with and eventually changed a lot of what's happened in Wall Street. It chronicles everything from the invention of program trading to the crash of '87 to the crash in Japan and what happened, the follow-ups to the Eurozone collapse and what went on after that, et cetera, et cetera. So, it's meant to be, kind of written along the lines of reminiscences of a stock operator. But along the way, you get a lot of investing lessons, explained with humor, because it's meant to be pretty funny, but as well as, why things and why markets work the way they do. So that's something that is just in the process of the copy edit phase with the publisher, and we're going to get it out. It'll be to the printer, in a few months. And then, believe it or not, they still take months to get it printed.
Well, that's amazing. I mean, you've got great analogies, an amazing way of explaining things, and you couple that with the stories of your career. I'm sure it's going to be a fantastic book. Really looking forward to that.
Well, thank you.
Yes. All right, Dave. Well, I'm sure I'll have you back on once the book is out and we can discuss that.
Great. Thanks, Rob.
Cheers. Bye-bye.
Have a great rest of your week.
You too. Thank you so much for making it all the way to the end. If that conversation got your gears turning, do me a favor and hit like, subscribe, and drop a comment with your take. If you enjoyed that, you'll love our sit down with Fernando Nikolic, former VP at Blockstream, now building AI full-time. Fernando lays out why we have about 18 months before AI splits the people who build from everyone else, and why the symbiosis between Bitcoin and AI might be the only thing that drives the next wave of adoption. I'll see you over there.